Is there such a thing as an ethical billionaire? Many sources have said no. While Ken Griffin certainly has an admirable success story, he is not without scandal. From near wipeout to record $238 million, homeowner Griffin owns several of the world's most expensive properties, one of the biggest and most affluent hedge funds in the world, and various pieces of extremely rare art. However, he has been known to adopt quite a few questionable business practices which, let's face it, takes the shine off of his otherwise sterling reputation. Here's what he does to maintain his billionaire status, and here's how he spends his fortune. The 51-year-old billionaire is the founder and CEO of Citadel, a hedge fund that manages nearly $30 billion worth of assets, and he has a net worth of roughly $12 billion, according to research firm WealthX. That amount puts Griffin well behind people like Amazon CEO Jeff Bezos and Microsoft co-founder Bill Gates, the world's two richest people, respectively, with estimated net worths well over $100 billion apiece. But Griffin still outranks those titans of wealth in at least one category. He owns the most expensive home ever sold in the US, a penthouse overlooking Central Park in New York City that Griffin bought in 2019 for $238 million. That record-setting purchase topped the previous record for a home sold in the US, which had been the $147 million paid by fellow hedge fund manager Barry Rosenstein in 2014 for an 18-acre estate in East Hampton, New York. Griffin's luxurious penthouse also outpaces the recent splashy real estate deal from the world's richest person, Bezos, who reportedly paid $165 million for a Los Angeles mansion in February. During the 2008 financial crisis, the television network CNBC parked a van outside the Chicago headquarters of Ken Griffin's hedge fund Citadel, expecting the company to fail. The producer's precaution was understandable. Citadel was losing hundreds of millions of dollars each week, Mr. Griffin later told the Financial Times. More than a decade on and Citadel has rebounded, becoming a $28 billion behemoth that is majority owned by Mr. Griffin.
Let's get down to business.
Even billionaires weren't exempt from the effects of COVID-19. When the coronavirus pandemic broke out, the world stopped. People no longer went about their daily activities, and everyone watched with bated breath to see how the virus would move. Businesses across the globe were badly hit, and no one was exempt from the negative impacts of the virus on life as we knew it. Ken Griffin, in particular, was facing a calamity of epic proportions. The pandemic practically sunk the economy back in March of 2020, and bond markets fluctuated. This especially affected Griffin because he is the leader of one of the biggest and most popular hedge funds in the world. However, it seems that he was able to turn things around and get luck back on his side. He was even able to boost his net worth by a few $1 billion. However, Griffin's rise to financial success has not been without issues. Just this year, both Griffin and Citadel were criticized for the latter's role in the GameStop short squeeze back in January. A short while after the whole debacle, it was announced that Melvin Capital would receive an investment worth $2 billion from Citadel as Melvin Capital had suffered roughly 30% worth of losses from its short positions on GameStop. However, trading platform Robinhood announced a few days later that it would stop all the purchases for GameStop securities except for the ones that would be done to cover shorts and would only allow GameStop securities to be sold if they were already held. This caused the price of GME stock to plummet. A good chunk of Robinhood's revenue comes from a pay-for-order flow agreement with Citadel, so many analysts and investors brought up the possibility of Citadel's actions towards Melvin Capital being a conflict of interest, as the same entity both plays the role of market maker and also participates in the market that it makes. All eyes were on Griffin during this discussion, and he testified before the House Financial Services in February 2021 to talk about the role he played during the entire GameStop debacle. He even defended his actions, saying that it was something that was typically done in the industry. However, this practice is still very much in question. Going back a little, Griffin was born in 1968 in Daytona Beach, Florida. As a child, he moved around a lot, living out his childhood in Boca Raton, Wisconsin, and Texas. His love for mathematics was evident ever since he was young because he was the president of the math club at the Boca Raton Community High School. His instincts for business kicked in around the same time because he began a discount mail-order education software firm called Edcom, and he ran it from his bedroom. This led to him being featured in a 1986 Sunday Sentinel article, where he talked about his dream of becoming a businessman or a lawyer in the future. He began attending Harvard College in the fall of 1986, and it was during that time that he developed an interest in investing. He had found what he believed were inefficiencies in the convertible bonds market, which basically allows for company bonds to be turned into stocks. To keep tabs on his investments, he convinced the administrators of the school to permit him to put up a satellite dish on the residential Cabot house. Griffin also pooled a $100,000 fund to open a brokerage account at Merrill Lynch in Boston. He had gotten this money from his grandmother, his dentist, and other friends and family members. When Griffin turned 19, he was able to launch his very first fund with $265,000. Fortunately for Griffin, he was able to make a profit from his short positions because he was able to get the fund launched just in time before the stock market crash of 1987 happened. He would graduate from Harvard in 1989 with a bachelor's degree in economics. This began his journey to launching one of the world's largest alternative asset managers. After graduation, Griffin moved to Chicago to work at Glenwood Capital Investments. The company's founder, Frank Mayer, provided Griffin with $1 million worth of Glenwood capital for him to trade. With Mayer's guidance, Griffin was able to sharpen his skills as an investor, and his time at Glenwood became a stepping stone for him to set up his own company, Citadel LLC. Griffin was able to start Citadel with a whopping $4.6 million worth of assets under management, some of which were contributed by Frank Mayer. In just 8 years, Citadel grew exponentially. The company was able to hire over 100 employees, and it was able to secure over $1 billion in investment capital. Today, it has offices across the globe. Due to Citadel's massive growth, Griffin was able to accumulate quite a lot of money. In 2003, he was named as the youngest self-made individual on the Forbes 400 list for having a net worth of roughly $650 million at the age of 34. In 2008, Citadel was able to receive $200 million from U.S. taxpayers from the AIG bailout, and Griffin was able to earn $900 million in 2009 from the company. And it just keeps getting better and better. He was able to earn $600 million for his work at Citadel in 2016, $1.4 billion in compensation from Citadel in 2017, $870 million from Citadel's hedge fund segment in 2018, $1.5 billion from Citadel in 2019, and, finally, a whopping $1.8 billion for his work at Citadel in 2020, which we will be discussing in a bit. As of October 2020, Griffin was able to establish a net worth of $15.8 billion, making him the 45th richest person in America. He also makes use of Citadel's services to keep growing his wealth. According to Bloomberg News, Griffin has around $5.4 billion worth of personal assets invested in Citadel's funds. His savvy as an investor was put to the test in 2020. When the world was racked by the effects of the coronavirus pandemic, Griffin saw it as an opportunity to profit. According to Bloomberg Wealth, his traders at Citadel got to work, scouring beaten-down credit markets, snapping up finance company debt and taking advantage of wild fluctuations happening across the globe. According to Griffin, the whole thing was a macro trader's dream. He was also taken by surprise, in a good way, when Congress promised a $2 trillion stimulus package and the Federal Reserve took steps to help them recover. As mentioned earlier, Griffin spends tons of his money on real estate and art, which is a smart move considering that the value of these two commodities tend to appreciate as time passes. In the art world, Griffin is known as an active modern and contemporary art buyer, acquiring pieces from more well-known artists. He has Cézanne's painting titled Curtain, Jug and Fruit Bowl, Johns' famous 1959 painting False Start, and pieces by de Kooning and Pollock, all of which were sold to him for several $100 million. To date, his art portfolio is roughly valued at $800 million. Meanwhile, in the world of real estate, Griffin's assets are valued to be roughly $1 billion. He has properties in Hawaii, London, New York, Miami, Colorado, and Chicago. In 2019, he set the record for the most expensive residential sale in American history after he purchased a property that was over 24,000 square feet across 3 floors. The property was located in New York, and it sold for $238 million. It was still raw space, so Griffin had to build it up and furnish it, but it might well be worth it. In an interview with David Rubenstein, Griffin said that his purchase of the property may just make New York his permanent home in the future. It has since been dubbed as America's most expensive house. Speaking of the most expensive houses, Griffin also purchased the most expensive home in London. The fund tycoon purchased a property near Buckingham Palace for a whopping £95 million. Apart from his investments in art and real estate, Griffin is also known to be quite charitable. He has donated large sums of money to the church he was attending for a new chapel, the Museum of Science and Industry, the Chicago Children's Memorial Hospital, and the Robin Hood Foundation. Together with his ex-wife, he also founded the Kenneth and Anne Griffin Foundation, which is primarily focused on giving donations to public schools and libraries. Every family has a black sheep. For months, the world watched with bated breath as the 2020 United States elections drew closer and closer. Presidential candidates Donald Trump and Joe Biden were neck and neck when the votes were being counted, and Biden eventually emerged victoriously. At first glance, Biden seems to have a picture-perfect family. However, during the years leading up to the elections, the media seemed to have zeroed in on Biden's son, Hunter Biden, labeling him as the now president's scandal-plagued middle child. He has gone through some trouble over the years, and he was also able to establish a net worth of roughly $3 million, much of which was put into question by both the media and ex-President Donald Trump. In that video, we will be talking about what has been going on in the younger Biden's life and how he was able to earn those millions of dollars. You can check it out in the video up on your screen now, so click away, sit back, and relax. See you in the next video.